Hey, welcome everybody. My name is Michael Camo. I'm Director of Content for T3 Live, and I'm here with my good friend J.R. Romero, who's going to answer the most important question of all for us, which is, which way do we go? Market may have hit a little bit of a stumbling block last Thursday, looking a little shaky this week, even though we've had some big positive news like NVIDIA going wild and all that stuff. So, Jared, the big question, I think, because everybody's staring at this big red candle from last Thursday, after the market was just, hitting high after high after high. Does it mean anything at all? Am I reading too much into this nonsense?
The problem with signal bars like that is they make perfect sense in retrospect, right? If it was a failed liquidation break that failed to hold 53.33 on the SPOOs, right, in the beginning of a bearish igniting sequence, then technicians will say, well, that was the liquidation break and leg one of a two-wave corrective down to a 50% or a 618 retracement. And then if it doesn't do that, then people are going to say, well, it was a bleep in the road. The the daily uptrend was still intact, et cetera, et cetera. That traders suffer from a psychological condition called apophenia. Have you ever heard of this?
I have not, but this is a new one for me.
Yes. Apophenia is a psychological disorder. And if you're a trader, you're probably a little bit disordered as it is. It's the tendency to perceive a connection or a meaningful pattern between unrelated or random things. So you give a person 6.5 hours a day and a bunch of red and green sticks to look at, you're going to see some things that sometimes aren't there. And so, yeah, technically speaking, some damage was done, right? You had a failed breakout on the S&P futures through 53.47, and it was a liquidation break. Okay. The issue is that it really didn't take out 52.63.75, which is the level, in my opinion, that the S&P futures need to hold, the SPOOs need to hold. And then you had an inside bar, a failed outside bar reversal, and then today a sell setup. And until 52.66 breaks, I'm really not going to sweat it. What we're doing is trading the range, and we're doing that pretty effectively.
Okay, so I think that this concept of apophenia is pretty interesting. I just myself did some extensive research on Google on the first response on the AI generated answer on Google. So I think that this is interesting because I find these things very interesting. How do you think that relates to confirmation bias? Because we see this all the time with market observers. No matter what happens, it's bullish for gold or it's bearish for stocks or whatever it is. So do you think it's kind of like because you talked about apophenia defined as perceiving connections between unrelated things, but is that related to confirmation bias, which is basically fitting whatever you see in front of you to fit what you thought before?
Yeah. In my opinion, professional traders focus on value, intermarket relationships, supply and demand. Everything else is noise. Okay. If you look at the S&P futures or the SPX, is that a piercing reversal and big upthrust reversal before a major correction lower, or are we just forming the right side of a cup? Well, you have to ask yourself, what is the context of this move? Is it wildly bullish from November? Yes. Okay. Is it possible that instead of did you hear about the Hindenburg omen? It triggered last week, and people are going bananas.
Yeah, I saw. I haven't. It was honestly, from my perspective, the Hindenburg thing was pretty quiet this time. The last time it happened, people were going pretty crazy, but I don't think it was that. I don't know. Maybe you saw it in the room or something, but I didn't see too much discussion of it.
You know, I always people text me these things. Like, Jr. The Hindenburg omen just triggered. Mercury is in retrospect or whatever, retrograde, whatever it is. I just go, okay, numbnuts, you hold my beer. Let me handle the business. And it needs to be taken care of. All you have to do is listen to what the chart is saying. Okay. Supply, demand, structure, order flow, market relationships. We are under some pressure here as the 10-year yields are climbing and the dollar is strong. We have a bit of a hangover post NVIDIA earnings. It does not mean that we're not forming a new reaccumulation base up here. So, you have to think about multiple timeframes. In the short time frame, we've been shorting the market and also longing the market within the hourly declining channel. We've also been longing the market. The market came in net short today, and we did a fantastic job of capturing the bounce in the NASDAQ, right? So these bigger signals like we had on that reversal bar from Thursday the 23rd, yes, it's definitely a liquidation break. It doesn't mean much other than that until we understand whether this is a reaccumulative or a distributive structure. And you're not going to know that until levels are broken and then fail to penetrate the prior balance range. So I find these signals, when traded in a vacuum, to be completely useless and to lead to acute cases of apophenia, or as I call it, pinhead syndrome.
Pinhead syndrome. That sounds a little mean. Okay, so since you brought up apophenia, I want to bring up the death instinct from Sigmund Freud. Because
we're getting scatological now. Okay.
Not necessarily, but
eschatological. Sorry.
Yeah. Okay, but
play on words.
Okay, but psychologists have noticed that there may be a phenomenon for people to perform activities that lead to their own destruction or demise. And sometimes I actually think, especially for the perma bears out there, that they are dying for they want the world to end. they just they want, I don't know, it's like some people's tendency is to assume bad things are going to happen, and then they want bad things. I think I need to articulate this a little better. I got to think about this theory. But do you think, what do you think of these people that just they seem to want bad things to happen in the world so they can be right about the market?
You're thinking about the Peter Schiffs of the world?
Yeah, I haven't seen Peter Schiff in quite a while, so I don't know if it's him specifically. But there are people that no matter what the economic data, it can be anything. It could be NVIDIA's valuation, it could be the CPI or whatever it is, or the price of the U.S. GDP to the S&P market cap. Whatever it is, it's interpreted as the world is about to end. That's what I think it is. It's no matter what it is, it's I'll give you an example. Somebody could say NVIDIA's, if it has a high PE, that's a sign of a mania. If it has a low PE, that's a sign that estimates have peaked, they're about to drop. Stuff like that. Just this obsession with assuming. Eddie's saying it pretty well. I think crisis. Whatever it is, it's a crisis.
Crisis everywhere. Well, I mean, it's not like we're borrowing $1 trillion every 100 days. No, we're actually doing that. Yeah, no, we're actually doing that. Yeah, so maybe we are in some trouble.
Okay, all right, yeah. So the borrowing $1 trillion every day, which means it could be $2 trillion every 30 days, whatever it is next year. All right,
all debts are paid, Michael. All debts are paid by the creditor or the debtor. We're going to pay. One day we're going to pay.
Okay. Do you have any idea of when? Because I remember when they put up the debt clock in New York City, that must have been 20 or 30 years ago, and it's been going up like nonstop ever since. Like, do you think we will in our lifetime? Like, I don't know how old you are. I'm 46. Do you think we will pay a price in our lifetime? In my lifetime, anyway.
Well, I'm going to invoke chronological apophenia here. My bunker is due to be finished in 6 months, so I'm going to say 6.5 months. That's a good number. 6.5 months.
6.5 months.
I think it's what we're doing is wildly unsustainable. I think it is the biggest transfer of wealth in the history of mankind. We're going to see people who are invested in the markets profit from this, and people who are in cash or regular folks who work and don't have savings are going to become increasingly poorer.
And do you think that that's because of inflation?
Because the dollar will suffer. I mean, look, the inflation we're undergoing in the past 3 or 4 years has been a massive transfer of wealth. People who have been in the markets have fared well, and regular average folks have had the biggest tax hike of their lives. Inflation is a tax on the middle class, and that is why you're seeing, what is it, 70% of American households can't sustain a $500 expenditure beyond their monthly budget. It's a disaster.
Yeah, I agree. I think, and I think that's like a big frustration among normal people out there where I saw we'll roam into the political a bit here, but like the Democratic strategist James Carville, who's like retired, so he can sort of be on. He's allowed to be honest now, and he said that like there are a lot of politicians where their message now is you're an idiot if you don't see how strong the economy is, but like if
okay.
you. But I mean, like, if you go out and just buy like if you buy a carton of eggs or a can of beans, you understand. Or if you buy used cars, car insurance, home insurance, like everything has basically gone through the. Okay, so
$58 for an omelet is perfectly reasonable. I don't know what you're talking about.
Do you remember going to Chipotle with like $9?
I took my kids to Chipotle a couple of weeks ago with $60.
Yeah, we're gonna have to raise prices at T3 because we to keep us in, so we can afford burritos. But okay. Do you make any sort of like macro bets based on these views? Like would you do something like would you put on like a short of the U.S. dollar or something like that? Like how far out are you willing to speculate?
When the market corrects and P's go through the floor, I buy the market aggressively. When the P's are 24, 25, 26, 27, I wait. That's it. It's very hard to beat the S&P 500, man, as a long-term investor. As a day trader, your job is to slaughter the S&P 500, right? If you're not eating. You're not making a living. But yeah, as a long-term investor, all I care about is the price to earnings ratio of the market. When it's cheap, I buy it. And I don't buy just index funds. I buy clearly strong names. But that is, I know Scott Redler does something very similar. That's the one winning strategy I've seen for the past 22 years.
Yeah, buy the dip.
It's hard to beat the S&P 500, my friend.
Yeah, it truly is. Okay, so let's talk about some of the things we're seeing out in the market. So, like the 10-year yield has been on a creep up this year. Like, do you think the Fed will actually cut rates?
I don't know. Did you listen to Kashkari yesterday?
No. What kind of trouble is he making?
We've gone from we're getting 7 cuts to we're going data dependent to we're not taking a couple of rate hikes off the table. So, ever since the December debacle, You know, the Fed got way ahead of itself. They've been trying to socialize the fact that we're probably not going to get any rate cuts this year, and you have a lot of sectors in our economy that are incredibly sticky: services, housing, shelter. You know,
Yeah, I think it's amazing what you can get used to as long as the change is gradual, because it's a pretty massive
frogs in the
policy.
saucepan. Yeah,
Yeah, it's a pretty massive policy change, but they're just like one step at a time. So I'm going to give them credit for pulling the wool over our eyes. We are, but look at the market. You know, it's still up. So there's something there. Okay, how about
I don't know. I kind of miss the old school Fed heads. They come in with a briefcase. They'd be like Seneca the Stoic. They'd say 5 sentences, walk off into the sunset, and then you wouldn't hear from them for like 3 months. These guys, freaking chatterboxes. It's like a teenage hotline every day. You know, unbelievable.
I think it would be better if um like they didn't talk to if they couldn't talk to each other and they couldn't coordinate the messaging, like if they were all just locked in a room and they had to just like tweet out something once a month and see what they come up with. But yeah, because I remember I talked to like a guy I know who's probably the smartest person I know on the Fed, and there is like some effective diffusion by like constantly having chatter out there. They can basically test every message and soften the impact of any one thing. So I think they are, you know, I think like every idiot on Twitter likes to pretend that they're smarter than you know, whatever person at the Fed. But
Yeah, we joke around. You know, in our room we have this ongoing joke that Jerome Powell has a set of monitors behind the press with the S&P 500 and the VIX. And, you know, and you just monitors after every sentence. Like, okay, all right, they bought that one. You know, let's keep going.
yeah, we better not find out he has like a Robinhood account and he's on his phone at the podium screwing
Well,
around.
look, we're at the end of a 12-year cycle of very easy money, and it's going to take years to untangle this, especially with the hyperinflationary policies that Democrats and Republicans have been deploying since COVID. We've thrown a lot of gasoline on the fire.
Okay, so every so often it feels like the U.S. economy is due for a car crash of some kind. Do you think it's like slow mo? Would you guess the next one is slow motion or all at once?
Well, we've got a lot of simultaneous bubbles, right? Uh, Private debt, credit card debt, housing. The real estate market is in big trouble commercially. You know, a lot of people are concerned about what that's going to do to regional banks. I don't know.
Yeah.
Hard to say.
That's the question. The question is, I feel like everybody knows what's going on. It's just the when is so hard to figure out. Okay, let's go through before while we still have Jr. What do you think about gold? Because you know, gold zipped up. It's had a big move. It came back down a little bit, but you know, I mean, I honestly I can't take like the gold bug people very seriously. But like, what do you think of gold?
3,000 is my target.
3,000, very very bold. So I admire that gold. Yeah, I'm tempted. Okay, so Nvidia's up 131% year to date. They
By
just
the
had
way, it's been my target for like a year. It's not like I'm a latecomer to the gold bug frenzy.
okay.
It's a multi-year base that's looking very bullish. The measured move takes you through 3,000.
Gold 3,000. You heard it here. Okay, how about Nvidia? Like I know you've liked Nvidia. We talked about it into earnings. You liked it long term. It's up 131% year to date. It's number one stock in the queues.
Yep.
You still like it?
Yeah, I mean, 2 weeks ago, my target was 1150 and 1200. We tagged 1149.37, I think, something like that. What was the high?
I don't. It was
1149.39. That's Close enough for government work, Michael.
Yeah, you did a hell of a job.
Yeah.
Okay, how about, and we'll close it. So Apple's up 17% from the April lows. What do you think of our friend Apple here?
All-time highs coming within the month.
I agree. I love when I'm in Apple, so I like to hear that. I like to hear what I want to hear. Okay, JR, fun as always.
Apophenia.
I think these are the three things you need to take away. First, you need to learn about apophenia. Second, you need to look up Freud's death drive and make sure you don't have it. And third, gold 3000. Gold 3000, guys. Okay, JR, always fun. Thank you for joining me, and I will see you next week.
Take care, Captain. You're a Renaissance man.
I know. Thank you.
Take care, man.